Good morning, everyone, and welcome to the Money Control live stream. You're watching Markets with Santo and CJ. Well, a Wednesday wobble awaits Dalal Street this morning. If you look at, the setup at this point of time, we failed to cross that 17,700 mark on a closing basis yesterday, and today it looks like we are in for almost a 200 point cut on the Nifty. If you look at the SGX Nifty, it's down about 190, 200 points at this point of time. The Q or the handover from Wall Street yesterday was also quite negative. US benchmark indices ended deeply in the red after very strong economic data, very strong US services PMI data for the month of August, which has again basically heightened concerns that the Fed will continue to raise rates at a very aggressive pace going ahead. But the interesting action, guys, is actually happening in the forex market at this point of time. The Chinese yuan and Japanese yen, the yen yuan, is creating chaos in the Asian currency markets this morning. The yen has slumped to a fresh 22-year low. Yes, 22-year low against the US dollar as the BOJ continues to tread a different path to the rest of the world. Remember, the rest of the world, central banks everywhere else are raising rates because they're so concerned about inflation. But the Bank of Japan wants to continue its accommodative path and wants to continue to buy more bonds to keep yields in check. And clearly, investors at this point of time don't believe that that is the best strategy for the country. There is now concern that the Bank of Japan will ultimately have to intervene to stop the slump as far as the yen is concerned. But its neighbor, China, has already started intervening. The yuan also has been weakening considerably. I mean, all emerging markets, including our domestic currency, the rupee, has been weakening against the US dollar, given that the US dollar index is sitting pretty at an almost 20-year high at this point of time. And it seems today, in the morning, every day, the PBOC or the Central Bank of China sets a reference rates for traders as far as the yuan is concerned against the US dollar. Earlier today, they set the reference rate as the strongest level that they have ever set on record, almost a 454 point pips difference to the the consensus Bloomberg estimate for the yuan against the dollar, and that has clearly shown or raised concern that the Chinese government is not really happy with the weakness that the yuan is exhibiting at this point of time. So a lot of chaos happening in the currency market, and it'll be very interesting to see how our own currency reacts to all this. Remember, the rupee slumped to a record low not so long ago, but since then had made a very sharp comeback to about 79.45, and then again has slumped towards 79.83 level. A lot of traders are of the view now that probably the rupee is now headed towards the 82, 83 handle against the US dollar. But let's not also forget that every time it has crossed that 80 level mark, we have seen some bit of intervention from the RBI to probably stem the depreciation in the currency. So very, very interesting market at this point of time, the forex market, whereas the equity market has been, a bit wobbly globally. The forex market is where a lot of the action is happening. Now let's look at the technical side, of the Nifty today. Clearly, the major question that will arrive on everybody's head after, if we do get almost a 200 points gap down movement today, is that is this a start of a new selling wave? Not so long ago, we saw almost a 400 point cut in the Nifty, but we very quickly came back and bounced back towards the 17,764 odd levels. But at this point of time, it looks like if we do see selling continuing, the 17,400 level would be the crucial support for this for the index, because recently over the past 5 to 10 days we have been moving around in the range of about 17,400 to about 17,777. So this is the main trading range, and if we break below 17,400, then of course the next level to watch out for would be 17,000. But if we do not, then probably you could see a decent amount of bargain buying happening around the 17,400 support, and we could commence our journey towards the 17,800 mark. Traders or technical analysts are of the belief that if we do have to make that move towards 17,850 and then probably around 18,000, we need to consistently stay above the 17,777 mark for at least 60 minutes, on the hourly chart, and only then can it confirm that we have resumed a new uptrend. So clearly very interesting setup at this point of time. It will be very interesting to see, because tomorrow will be the weekly option expiry. So usually you see a lot of volatility around the benchmark indices because of that. It will be very interesting to see if we do see a lot more short positions being added. I would expect that some short positions would be added by traders today, given that we are almost seeing a one-way 200-point cut, expecting to see almost a 200-point cut, and that should probably give initiative to a lot of bears to add short positions. But let's see, let's keep our fingers crossed that this is not a new wave of selling on Dalal Street. Now let's quickly move on to some of the stocks on my radar today, and they are very interesting names. If you look at the first name is from the steel sector. Yesterday steel stocks were quite active in trade, good volumes, good price action as well. And from that, within that sector, of course, Tata Steel is one name that I will be watching out for. The stock will be in focus because news reports emerged yesterday that the government has now begun discussions with the industry to probably have a relook at the export duty that it had imposed. Back in May, the last week of May, the government had come out with some curbs on the steel sector, including an export duty. And it will be very interesting if those duties probably are revised lower or maybe removed altogether. The industry has been clamoring for its removal. So let's see. I believe that if we do see some sort of improvement there, probably Tata Steel would be the first name on everybody's lips, because it is an industry leader. It has a good export business, and clearly with the possibility of more stimulus in China, Tata Steel could end up being a big beneficiary on that side. But apart from that, if you keep that side of the business story aside, steel companies in general are expecting a good revival as far as volumes are concerned and the pricing is concerned in the second half of this year. They believe that prices in the domestic market have largely bottomed out at this point of time, and given the fact that raw material prices will also come down, margins could start improving from the third quarter onwards. On the volume front, clearly there is expectation that government will step up or accelerate its infra spending going ahead. So far, infra spending has been a little lackluster, but going ahead, people are expecting a good capex revival in the country, and a lot of people are betting on that, and therefore steel companies would naturally expect volumes to be improving going ahead. So a very interesting name to keep an eye out on in the coming few sessions. The next stock is from the banking space, and this has been news recently, is Kotak Mahindra Bank. News came out earlier this week that there is a possibility that they are exploring a merger with Federal Bank. Now CLSA did a what if analysis if the merger goes through, of course. So far Federal Bank has denied any talks. There are clips circulating of of a high management of Federal Bank even at a casual event indicating that they are not really participating in any sort of merger talks. But CLSA is of the view that if such a merger were to happen, this would be a very good boost or a positive thing for Kotak Mahindra Bank. They're expecting almost a 12% upside as far as the earnings per share of Kotak Mahindra Bank is concerned. Apart from that, the most important point that CLSA made in this note is that fact that because Kotak is looking at a very ambitious growth plan going ahead for the next 4 to 5 years, they're expecting to compound their loan book by almost more than 20% for the next 3 to 4 or 5 years. They would require a higher or a wider deposit base. So even if the Federal Bank merger does not work out, I would not be surprised if Kotak Kotak remains in the hunt for more inorganic growth opportunities as far as deposit base is concerned. So this is one stock to really keep an eye out on, especially for those who trade the special situation trade in the market. This will be one stock to keep look out for. The next stock is again from the banking space, and this is IndusInd Bank. The stock will largely be in focus because Morgan Stanley today came out with a report on the entire banking space, but it has also increased its price target for the stock to about 1400 rupees, which is a substantial upside from the current levels if you look at it. Morgan Stanley is of the view that balance sheet of the entire banking pack, not only IndusInd but the entire banking pack, is very, very strong. And of course, we are already seeing those green shoots of credit offtake in the economy. Credit growth, overall credit growth was almost at a 5-year high recently. So clearly loan demand is coming back, and Morgan Stanley sees IndusInd Bank as probably one of the biggest beneficiaries as far as loan growth is concerned, not only on the retail side but also on the corporate loan side. IndusInd, their asset quality improved quite sharply in the June quarter. The bank had been underperforming the rest of the pack last year, but this year it seems it has made a very, very strong comeback. And I would not be surprised that investors who are looking for a higher, outperformance would probably favor a IndusInd Bank over an SBI and ICICI Bank, which have already given some massive returns over the past 2 years. The next stock on my radar is Bajaj Auto from the auto space. Another interesting brokerage take, CLSA has downgraded the stock from a buy to an outperform rating. Yes, it's not the end of the world, but the reasons why CLSA has downgraded is very interesting. So throughout last year, throughout the late 2020 and last year, Bajaj Auto was probably one of the outperformers within the two-wheeler pack, largely because its export business was doing so well, even though the domestic business was suffering. And a lot of the other companies had a larger focus on domestic business than on the export business, and therefore Bajaj was able to outperform. But this year, while there is, of course, optimism for the domestic business, the export business of the company has been suffering for the past 2 quarters. Even the recent sales data that came out for the month of August, you have seen exports take a big knock, largely because of geopolitical issues in some of the African countries that the company exports to. Also, the Sri Lanka business is not doing really well because of the dire state of the economy there. The three-wheeler business there is also not doing that well. So clearly, if you look at it from the export side, the things are not looking great. But even if you look at it from a domestic side, as far as two-wheelers are concerned, I think there are still a lot of concerns out there. Yes, the premium side of the market is doing well, and you can see that in the numbers of a premium bike maker like Eicher Motors. But if you look at the entry-level segment, the Hero MotoCorps and the Bajaj Autos of the world are really not, showing or suggesting that growth really has come back in the lowest common denominator as far as the economy is concerned. Entry-level two-wheeler demand is currently sitting at about 2015 levels, at least on the retail level. Companies are trying to bulk up, your wholesale deal, the inventory with the wholesale dealers in the hope that festive demand comes back with a bang. But I think that still is a hope, and I think this will be one stock to really watch out for in terms of probably staying weak in the entire festive period. Next stock, the second last stock on my radar is BEML. Very interesting. This is more of a special situation sort of a scenario today. Today probably is the last day that investors can buy the stock to probably get a share in the demerged entity of the company ahead of the record date. Now, investors who buy one share of BEML will be entitled to one share of BEML land assets, which is basically the entity which will be holding the non-core assets of BEML, including the land banks of the company. Now, brokerage from Antique Broking had come out with a note, and they have suggested that the value of the land banks that BEML has, which will be now housed under BEML land assets and probably listed in a couple of months, is about 640 per share. So that is a decent amount. It's almost 36% of the entire value of BEML as a company. So it will be very interesting that if investors will line up to buy the stock today. And I think this will be one stock that could see a good amount of buying as well as volumes in the session today. Last stock, and this is the brokerage note of the day, and this is TTK Prestige. Yesterday, the management had come out on CNBC, and it was a very interesting interview, because they suggested that entry-level demand at this point of time is very, very slow. There is a massive slowdown as far as entry-level demand is concerned, and this is something in tandem with what I have been talking about as far as two-wheeler makers are concerned. So clearly, you can get a picture that the lowest common denominator in this economy at this point of time is still not in the pink of health. Now, ICICI Securities came out with a note, and they said that they are very confident in the business model of the company. Even though entry-level demand is suffering, premium level demand is going quite strong. Also, they are very confident that the company will continue to price away a lot of the market share from unorganized players out there. They expect almost 11% compounded growth in PAT and a return of equity of more than 16% in the next 3 to 4 years. And overall, they're looking at an upside of almost 17% in the stock over the next 12 months, which is a very decent, sort of a return if you ask me in a market like this. So clearly, another stock that you probably would watch out for in today's trade. And with that, I think we have the opening bell, and it has been a decent cut in the market. Nifty Bank is down about 300. Nifty is down about 0.7%. Sensex also down about 400, over 400 points at this point of time. And even the broader market, the market that has been outperforming throughout the past few sessions, the Nifty mid cap is down about 0.2% at this point of time. The Nifty small cap down about 0.4%. So clearly doing a little better than the benchmark indices, the headline indices. But if you look at the individual stocks, HCL Tech is down, Tata Motors is down, HDFC AMC is down. The market breadth is also quite in favor of the bears, with almost 1,227 stocks in the decline and only 723 stocks rising. Tata Motors down about 0.7%. Remember, Tata Motors subsidiary JLR has a very massive exposure to Europe, and with the Russian government cutting off gas supplies there, the fears of recessions have almost materialized as far as Eurozone is concerned. So that'll be another stock to clearly watch out for. And apart from that, if you look at Bharti Airtel, there's been a big block trade on Bharti Airtel. Almost 1.4% of equity have changed hand on Bharti Airtel. The stock is down about 1%, so you would expect some bit of pressure there. Interesting to see, given that yesterday I spoke about Bharti Airtel, how a lot of analysts and there's a lot of optimism as far as the company's 5G venture is concerned. It will be very interesting to see if there's some bottom fishing on the stock, and we may see recovery later in the day. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Give us your feedback. Let us know what you would like to see, what you would like to, which stock you would want us to touch upon in the comment section below. And for rest of your, of course, do keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. It's a special edition because we'll be discussing some of the stocks that could be in focus in the festive period. So do catch that show live at 3 p.m. Till then, have a great trading day.